FatBurger is an American fast food chain with over 150 locations worldwide. Staying true to their name, they serve calorie-dense burgers and fries, and mainly target non-health conscious consumers. FatBurger is owned by its parent company Fat Brands, which went public in 2017. Up until recently, it looked like things were going well for the company. In recent years, Fat Brands has rapidly expanded, acquiring restaurant brands including Round Table Pizza, Johnny Rockets, Fazoli's, and Great American Cookies, just to name a few. By the first quarter of 2024, they owned 18 brands, which operated over 2,300 locations across the world. On May 10, 2024, Fat Brands' share price fell 30% after former CEO and controlling shareholder Andrew Wiederhorn was indicted for allegedly siphoning $47 million out of the company. This is a huge amount of money considering that Fat Brands' market cap is less than $100 million today. In this video, we'll look at the details of the alleged fraud and what this could mean for the company going forward. Andrew Wiederhorn didn't start off in the fast food business. He first grew to prominence by founding a company called Wilshire Financial Services Group in Portland, Oregon. It was an investment company that purchased bad loans at deep discounts and attempted to collect on them. He took the company public, and throughout the 1990s, it was highly successful. By the late 90s, Wiederhorn's shares in the company were worth over $100 million. He was a prominent member of Portland's upper class, living in a $7 million mansion. He was a member of the Multnomah Athletic Club, an exclusive social club for Portland's ultra-wealthy. He also founded another company called Wilshire Real Estate Investment Trust, which presumably invested in real estate. This company was also publicly traded, and at some point changed its name to Fog Cutter Capital. Wiederhorn's investment strategy involved taking on large amounts of leverage to buy risky debt. While this had the potential for high returns, it also entailed a huge amount of risk. Through one of its subsidiaries, Wilshire borrowed $150 million from an asset manager called Capital Consultants Inc. Capital Consultants managed money on behalf of union pension funds. Wilshire used the $150 million to acquire high-risk loans. The loans failed and Wilshire was unable to repay Capital Consultants. Capital Consultants misled its pension fund clients about this default. They continued to raise capital and used the funds of other clients to replace the interest payments that should have been coming from Wilshire. It basically devolved into a Ponzi scheme. Despite the default, Capital Consultants continued lending money to Wilshire. So why continue lending money to a borrower that already defaulted? Wiederhorn gave a personal loan to Jeff Grayson, the founder of Capital Consultants. Capital Consultants' fraud was exposed in 2000, and the pension funds lost hundreds of millions of dollars. The losses were ultimately borne by the pension fund's retired beneficiaries. Andrew Wiederhorn eventually pled guilty to filing a false tax return and giving an illegal gratuity to Grayson. Wiederhorn was sentenced to 14 months in prison, which he served between 2004 and 2005. He also had to pay $2 million of restitution. Jeff Grayson was also sentenced, but suffered a debilitating stroke before he could serve any jail time. Wiederhorn blames his involvement on bad legal advice and claims he had no idea that Capital Consultants was engaged in any wrongdoing. This is a little difficult to believe. Why would you borrow money from Capital Consultants and then give a personal loan to Capital Consultants' founder? It certainly looks like a bribe. This entire affair was a humiliation for Wiederhorn. He went from one of Portland's most successful businessmen to a convicted felon. The Wiederhorn family became pariahs. Many in the community now believe their vast wealth was ill-gotten. Reportedly, while Wiederhorn was in prison, his wife and kids would be constantly harassed by their neighbors. The prestigious Multnomah Athletic Club expelled Andrew Wiederhorn as a member. Wilshire Financial Services went bankrupt, but Wiederhorn's second company, Fog Cutter Capital, was unaffected. When Wiederhorn went to prison, he maintained his position as CEO of Fog Cutter Capital and continued to receive his salary. Additionally, Fog Cutter Capital paid him a $2 million bonus, which was the amount he needed to pay his restitution. It's highly unusual for a company to continue paying its CEO while he's in prison. In fact, it's actually against the Nasdaq's rules, and the company's stock was delisted. After being released from prison in 2005, he still owned a controlling stake in Fog Cutter Capital, which was now a privately held company. In 2003, about a year before Wiederhorn went to prison, Fog Cutter Capital acquired the fast food chain FatBurger, which had 40 restaurants at the time. Following his release from prison in 2005, Wiederhorn focused his efforts on growing the FatBurger business. The Wiederhorn family moved to the Los Angeles area, where FatBurger was headquartered. Business appeared to be going well. Over the next decade and a half, FatBurger expanded rapidly. It operates as a franchise model. The restaurants are owned by independent franchisees, who buy materials and pay royalties to the parent company. In 2017, Wiederhorn IPO'd FatBurger under the new corporate name Fat Brands. They used the IPO proceeds as well as debt financing to acquire a large number of other fast food chains, including Fazoli's, Johnny Rockets, Round Table Pizza, and Great American Cookies, just to name a few. FatBurger's currently owns 18 fast food brands with over 2,300 franchise locations around the world. Having started a new life in Los Angeles, Andrew Wiederhorn spent significant efforts trying to rehabilitate his image. For example, he starred on the CBS show Undercover Boss, where he worked as a frontline employee at FatBurger. With the success of FatBurger's, Wiederhorn was once again able to provide his family with a lavish lifestyle. He appointed his son, Thayer Wiederhorn, to be FatBurger's chief marketing officer. The Wiederhorn family also made its way into the fringes of the Los Angeles celebrity scene. In 2015, Thayer Wiederhorn married a woman named Brooke Brinson. Brooke Brinson is the daughter of Kim Richards, a former star on the television show Real Housewives of Beverly Hills. The wedding was covered on the show, as well as various tabloids like People magazine. The Wiederhorn family spent huge amounts of money on personal consumption. They reportedly flew on private jets, drove a Rolls-Royce, and lived in a multi-million-dollar mansion. As CEO of FatBurger's, Andrew Wiederhorn received a salary of $400,000. His son Thayer made a salary of $300,000 per year as chief marketing officer. A third child made a salary of $250,000. In total, the Wiederhorn family was making close to $1 million per year in salary from the company. However, it appears that this was not enough money to keep up the lifestyle they desired. Prior to the IPO, FatBurger, as well as a couple other fast food chains Wiederhorn had acquired, were owned by his holding company Fogcutter Capital. When they did the IPO in 2017, they created a new entity called FatBurger's. Fogcutter Capital transferred ownership of the fast food chains to FatBurger's. In exchange, Fogcutter Capital received 80% of the shares of the new entity. The remaining 20% were sold to the public in the IPO. Fogcutter Capital was now an empty shell. It didn't have any significant operations or revenue. Andrew Wiederhorn owned a controlling stake in Fogcutter Capital, which in turn owned a controlling stake in FatBurger's. Andrew Wiederhorn was CEO of both companies. Between 2017 and 2020, Wiederhorn allegedly directed FatBurger's to lend $28 million to Fogcutter Capital. Fogcutter Capital then transferred most of this money to Andrew Wiederhorn and his family members. Wiederhorn allegedly used this money to pay for private jets, first-class airfare, a Rolls-Royce supercar, luxury vacations, mortgage and rent payments, and jewelry. For example, he allegedly racked up a $5 million balance on his personal American Express Centurion credit card. He used funds siphoned from FatBurger's to pay this bill. On FatBurger's financial statements, the cash transfers to Fogcutter Capital were classified as intercompany loans. Because they were considered loans, this outflow of cash did not show up on the income statement. FatBurger's claimed to be charging a 10% interest rate on these loans, and that they expected the principal balance to eventually be paid back. By the third quarter of 2020, the balance of the loans to Fogcutter Capital reached $33 million. This includes $28 million of principal plus accumulated interest. To get a sense of how massive this loan was, between 2017 and the third quarter of 2020, the company's revenue was $54 million. This loan represented 62% of the company's entire revenue during this period. In reality, the so-called loan was a sham. No interest was ever paid, and Andrew Wiederhorn never had any intention of paying back the principal. Wiederhorn was a very extravagant spender. The tens of millions of dollars he siphoned out of FatBurger's wasn't enough to satisfy his appetite. So he applied for various personal loans. When you apply for a loan, you need to disclose your income. The larger your income, the bigger the loan the bank will give you. In September of 2020, Wiederhorn was applying for a loan. In an email he sent to the bank, he explained that in addition to his $400,000 salary, he also received $3 to $4 million of distributions from FatBurger's. The distributions are in the form of loans, and the company periodically forgives these loans. He expected the so-called loans to be forgiven. In other words, he never had any intention of paying them back. If we look at FatBurger's financial statements, the balance of the loans to Fogcutter Capital continuously increased until the third quarter of 2020. Then, in the fourth quarter of 2020, it disappeared. So what happened? In December of 2020, Wiederhorn merged FatBurger's with Fogcutter Capital. Remember that by this point, Fogcutter Capital was just a holding company with no real operations. So why bother merging these two entities? The official reason was to enhance financial flexibility and simplify the corporate structure. But there may have been an ulterior motive. Effective with the merger of Fogcutter Capital, the intercompany loan was terminated and intercompany balances were eliminated in consolidation. Just like that, the loan vanished from the company's balance sheet. With Wiederhorn effectively siphoning away the majority of FatBurger's revenue, the company was frequently running low on cash to the point that they were having trouble paying their bills. To solve this problem, Andrew Wiederhorn transferred about $9 million to his son Thayer. Thayer would then transfer the funds to FatBurger's corporate bank account to pay the bills. Basically, Wiederhorn extracted most of the money from FatBurger's and only gave back whatever was needed to keep the lights on. Wiederhorn's decision to merge FatBurger's and Fogcutter Capital was a clever accounting gimmick to eliminate the loan, but it was ultimately too obvious to get away with. Federal authorities grew increasingly suspicious about the merger. In February of 2022, the FBI raided Thayer Wiederhorn's house. Remember that Thayer is married to the daughter of a Real Housewife of Beverly Hills, so this FBI raid was widely covered in celebrity tabloids. Shortly thereafter, the company officially disclosed the federal investigation, causing the stock price to plummet. In March of 2023, Andrew Wiederhorn stepped down as CEO. By this point, he had not yet been charged with any crime. Despite stepping down as CEO, Andrew Wiederhorn retained a seat on the company's board. He continued to own a controlling stake in the company. As a controlling shareholder, he fired the entire board of directors and replaced them with his children. It's unclear what he was trying to accomplish. Perhaps he thought his children could somehow protect him from the investigation. On May 10, 2024, Wiederhorn was finally indicted on charges of wire fraud, lying to auditors, and certifying faulty financial reports. After FatBurger's went public, Wiederhorn borrowed $28 million in sham loans. The prosecution further alleges that he was engaged in similar schemes going all the way back to 2006, just 1 year after he was released from prison. In total, the sham loans allegedly added up to $47 million. If convicted, Andrew Wiederhorn will likely face many years in prison, given the sophistication of the alleged crime as well as his pre-existing criminal record. This case raises two questions. Firstly, what was Wiederhorn's motive? He already owned a majority of FatBurger's stock. If he wanted to extract money from the company, why not just distribute the money to all shareholders as dividends? Why take the risk of siphoning the money out with sham loans? Secondly, after the company went public in 2017, it took more than 4 years before the Fed started investigating. Why did the company's board of directors and auditors not realize that the majority of the company's revenue was being siphoned away? As far as there was motivation, there appears to be two main reasons. Firstly, FatBurger's was never very profitable. Between 2017 and 2019, they only made $1.5 to $3 million of operating cash flows per year. Even if the company paid out all of this as dividends, it wouldn't be nearly as much as Wiederhorn made from the sham loans. Since 2020, the company has been mostly losing money. Secondly, Wiederhorn would have to pay taxes on any dividends received. Wiederhorn didn't report the proceeds from the sham loans as income, which allowed him to evade taxes. Despite not generating a lot of cash flow, FatBurger's was able to expand aggressively, acquiring many small fast food chains. They funded these acquisitions by raising both debt and equity capital. If they were to pay excessive dividends, this could be viewed unfavorably by lenders, and this could put the company in a precarious financial position. Of course, the sham loans also put the company in a precarious financial position. But Wiederhorn went to great lengths to cover up the economic reality of the sham loans. The company's creditors presumably didn't know what was going on. Wiederhorn was already a multimillionaire based on his salary and his equity ownership of FatBurger's, but this just wasn't enough. He wanted more. Remember that Wiederhorn suffered a massive humiliation back in the early 2000s related to the Capital Consultants fraud and his subsequent conviction. He and his family became pariahs to the extent that they were effectively driven out of Portland. After he was kicked out of the exclusive Multnomah Athletic Club, he sued them in an attempt to get his membership reinstated. The lawsuit was thrown out. The fact that he filed this lawsuit shows how desperate he was to rebuild his reputation. There's a saying that success is the best revenge. He moved to Los Angeles and aimed to achieve even greater success with FatBurger, thereby overshadowing his controversial past. For a time, he indeed achieved this goal, becoming a member of the Los Angeles elite and getting his son to marry a Real Housewife of Beverly Hills. For the better part of a decade, he was able to provide a life of luxury for himself and his family. But every house of cards crumbles eventually. The more puzzling question is how he was able to get away with this for so long. For years, he was loaning himself the majority of FatBurger's revenue and never paying it back. How did the board of directors and auditors not notice this? The board of directors knew about the loans and approved most of them. Wiederhorn told the board that Fogcutter needed this money to pay for pre-existing, pre-IPO settlements and legal expenses, as well as general administrative expenses. Fogcutter Capital had some deferred tax assets related to the losses they incurred previously. FatBurger's could potentially use these deferred tax assets to reduce their liability in the future. Therefore, it was in the best interest of FatBurger's to give Fogcutter Capital enough money to resolve its legal settlements. That's how Wiederhorn convinced the board to approve the loans. Wiederhorn was allegedly lying. The money was not used to pay for Fodcutter's legal expenses, at least not to any great extent. The vast majority of the money was used to fund the Wiederhorn family's extravagant lifestyle. The board of directors appears to have been asleep at the wheel. It seems that they just took Wiederhorn at his word. They failed to investigate why Fodcutter Capital needed so much money. Alright guys, that wraps it up for this video. What do you think about Fat Brands? Let us know in the comments section below. As always, thank you so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.